Hello, Oracles. Well, there is a major macro shift going on right now. This could lead to an entire stock market and Tesla stock boom in 2023. We've got CPI data coming out this morning. We've got some other news that is going on. Huge sentiment shift happening right now, and we will get into that in a minute. All right, so we're going to do a quick rundown of everything that's been transpiring over the last couple of days in the macro environment. This is something we've been talking about the fact that when it comes to the stock market and Tesla stock itself, yes, there was a lot of drama and different things that caused the stock to come down last year, but you can't deny the fact that it was the entire economy around the world that has dragged down the entire market. And the sentiment around where we were heading has now shifted. We hit different points where we hit capitulation, panic, depression. Well, it seems like at the end of 2022, for the entire macro environment and the economy, we hit that panic point. We even had Elon coming out saying that we were looking at a potential deep recession like 2008 and 2009. Now, not to say that that can't still happen, but the sentiment seems to be changing. And the last CPI data kind of gave us that indication. Now today we are going to be getting the next CPI data. At 8:30 a.m. Eastern Time, we'll be getting those numbers. The expectation is 6.5% year over year and 0% month over month. So what does this mean? This means that we are looking at sort of deflationary pressures going on. Remember that the Fed is looking at a 2% year over year inflation on average is what they want to see the growth at. This is what stimulates the economy to grow. So if we are not growing at all, that means that it is working. We still want to bring inflation down. So having a 0% is not a bad thing. So we want to keep this coming down, show that month over month is shrinking. Once we get inflation in line, then the Fed can do what they need to do, which is pivot to get and re-stimulate the economy again. That usually triggers the next bull market. And so what's seeming to trigger this whole sentiment shift going on right now is this inflation data shifting and changing faster than people had anticipated. The Fed has been indicating all along that they were going to be needing to keep all the interest rates high for the remainder of this year, waiting to bring inflation down. It seems to be coming down faster than they expected. We're seeing a lot of revisions down. Last time we reported on the month-over-month expectations, it was 0.1%. It is now 0%. And today, President Biden is coming out at 10 a.m. to speak about inflation. The White House gets these numbers 3 days ahead of time. So they already know what is going on. So why would Joe Biden want to come out and speak about inflation? He hasn't done it in the last CPI reports. So the two thoughts that I have about this are either it's going to be because it's worse than expected, or it's better than expected. Well, we know that the Republicans just won the House in the most recent midterm elections, so my guess is Joe Biden's going to come out here and tout how his plan has been working, and this is why inflation is better than expected. So we may end up seeing maybe a 6.3% year over year number. Maybe we do end up getting a negative month over month number. This is something that maybe this is what Joe Biden is going to be talking about. Again, we don't know. That's going to be happening at 10 a.m., so about an hour and a half after we get the CPI release, he will be coming out and speaking about this. So chances are we are heading in that right direction, and he will show how the Inflation Reduction Act is working and how they're going to need to spend more money to be able to do things. I'm not going to talk political here. I'm not on one side or the other. I personally think we just need to get ourselves out of debt. I've been doing it for myself. Let's get the country out of debt. We need to stop spending, or at least spend our money in better places. Anyway, this is probably what he's going to be coming out and speaking about. Now, we also have Jerome Powell coming out tomorrow as well to speak. So we've got between President Biden and Jerome Powell over the next 2 days speaking. We may see a rally if they don't tell us things that are going to kind of scare the market at all. There's a lot of analysts coming out giving us a lot of positive sentiment and revisions going through the rest of this year. In the eurozone, they were expecting a contraction this year. Now they have revised that and they're expecting a 0.6% growth year over year in 2023. That's going to be stepping in the right direction. That does not show signs of a deep recession. They're just showing signs of maybe a little shallow recession at best and then coming out of it. And we are also looking at a 3% growth in the automotive market in 2023. And over on Twitter, Open Skies shares a lot of great information, and she shared a tweet by someone else sharing how the analog data between 2008 and 2022 were almost perfectly aligned. The data points going along the year kind of show the same inflection points all along the way. That has now broken trend here in 2023. Whereas right now, based upon the 2008 chart, we would be crashing right down. Instead, we are showing signs of coming back up and may actually do the complete opposite and skyrocket upward. Anything can change. Things can come out. We could have some data that comes out and shows us some sort of catastrophic failure somewhere and collapse. We are very familiar with black swan events now after 2022. So who knows what's going to happen, but based upon that one analog chart, shows that we are seeing a reversal, which goes in line with what all of these analysts are saying for the rest of this year. So when we start looking at the second half of this year being stronger, if we do continue to see inflation coming down, the Fed may end up pivoting sooner. Now we have a lot of analysts thinking that the Fed is going to be pivoting in the second half of this year versus the first half of 2024. If that is what's going to happen, we will see that rally happen sooner, and we can see what Cathie Wood is calling the Roaring Twenties happen a lot sooner than expected and see this bull run begin in 2023 rather than 2024. And now on the flip side of things, we do have Jim Cramer coming out saying that we could see the stock market rally for the next few months. Usually when Jim comes out and says something like that, we get the complete opposite. And tomorrow is Friday the 13th. Some people find that to be an unlucky day. So between the next 2 days, things could get crazy. We will see what happens, but a lot of analysts and signs are pointing towards this not being as bad of a recession as many people thought, and we will go back to a bull run sooner than later. And when it comes to Tesla in particular with this, we already spoke about it sooner. If we end up getting into a deep recession, that would most likely bury legacy auto and all these startups, and Tesla would come out stronger. As we have seen, this administration is not a huge fan of Tesla, and they do have close relations with legacy auto. So if this administration is seeing that a deeper recession could get us into trouble and really bury legacy auto, they know that they really can't bail them out. You can argue that maybe this IRA and the EV tax credit is the bailout for legacy auto, but that might not be enough. So maybe they need to do something to not cause this recession to get any deeper, because if they do, they might lose legacy auto entirely. That's my speculation. I don't know for sure, but it just kind of feels like that might be what's happening right now. So Tesla either way is going to come out the strongest on the other side. That is not a question. Tesla has poised themselves to succeed if things are going well and succeed if things are not going well. So this is going to be a good time for Tesla, and that means that we could see the stock price truly get to possibly a 2x by the end of this year, maybe higher. I don't know. My current price target right now, I still held it at 346 because I wanted to wait and see what earnings looked like, see what the CPI looked like, see what the FOMC meeting looked like. I will be revising all of my price targets after February 1st when we get the FOMC meeting, because at that point there, we'll have a better indication as to whether we will see a deeper recession or a shallow recession, and that in turn would adjust what my price target is going to be. Right now, my price target is based upon a shallow recession and not a deep recession. And we have Tesla yet again topping more charts. Over in China, Tesla grew the Model Y 85.6% year over year. The next closest competitor was the Mercedes GLC, which grew 9.5% year over year. So again, when we start talking about demand issues for China, it's really demand issues for all automotive. It's not Tesla specific. There may be some outliers here and there, but Tesla really is that outlier. So sure, they're not doing as well as they could be doing if we weren't in difficult economic times, but everyone else is struggling as well. And so this just shows how strong Tesla is going to be going forward. So what Tesla's going to push this year, they've got who knows if this Gigafactory in Indonesia is actually going to happen. We're getting some more rumors saying that senior minister over there is saying that yes, they are still in talks, but nothing is finalized yet. So we know that they're chatting. We know that they're talking with South Korea. On an operational level, Tesla is still moving forward full steam ahead. They are not waiting. They are not holding back. They are in plaid mode moving forward. This recession and everything that's going on right now, they had already kind of planned for. They talked about it at the Q3 earnings call. They were anticipating a deeper recession coming this year, and they still planned on succeeding very well to the point where they could do a $10 billion buyback. That's most likely still on the table. So we will talk about that tomorrow with Alexandra as well when she comes on here. And looking at the fact that if we get into a better economic time, maybe they do more. Or maybe they can invest in something else. This could just mean that they could really drive other areas forward. Don't forget, going through some times of supply chain issues, they had to hold a couple of things back. They couldn't accomplish their goals in the speed that they wanted to. Now, if we come booming out of this, the world might start moving closer to the Tesla pace, which means that Tesla could move even faster. So these very exciting times could be happening a lot sooner than we expect. I'm still not going to get my hopes up. I'm still going to sit here and analyze data myself, wait until I can see for sure that we have come out of this. My strategy will not change, but it's good to feel this positive sentiment and this hope going forward rather than all of the dire and distress that we were feeling for all of last year. So you can let me know your thoughts in the comments below. Do you think that we are going to be beating these CPI expectations today? And do you think that we are going to be getting a more shallow recession this year and actually see the rally starting in the second half? Thank you all so much for watching. Thank you for your support, and we will see you in the next one.